Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Tuesday, November 15th. Was there a turnaround Tuesday today? I don't know. Maybe, I guess, if you consider the intraday price action, but we'll get into that just a second. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer right here. Also, do this in the beginning of the video, get this out of the way. If you are not a member of the Tribeca Trade Group, please check it out here. This is what you get. We do have a new member end of year special. I tweeted this out a couple times. You could use the coupon code here, new to TTG. I will retweet this out, but this is going to end this week. So please take advantage. It is the end of year special. You get 2 months, both months, 25% off. And it's a great way to kind of see what we have going on here, see what our process is, see what our methodology is, and see how we're basically executing, and we've done very well in a difficult market. So this market is continuing to be a challenge. Gap ups on some days, which make it kind of difficult to position into this market, doesn't make it easy, but having some exposure kind of helps with that, in the overnight market. So again, these are all the things that you get. TribecaTradeGroup.com services, you can go to there. Also go to the where I tweeted that out in terms of on Twitter. You'll be able to find that in regards to the special. And we might as well just recap. I'll give you just a quick taste of what you get as a Tribeca Trade Group member. You get a weekend video where I talk about, the big picture, what the macro environment is, if it's a good environment to be taking risk, or if it's not, if I want to be more defensive. We talk about that every weekend. In addition, I put out a watch list with triggers, with chart. Every name gets a chart set up. You could see how we're doing 2 days into the week. Pretty darn good. I also did put out a free newsletter yesterday on just what we do. I put this goes out to members Monday, Wednesday, and Thursday. Tuesdays we do a midday video as well as Friday. But look at the names that we picked yesterday. All right, and we talked about some key levels, but STLD had I believe had a nice day today. Pins broke out today. I actually took that trade on today's pullback. Penn had some follow through, and Caesars, both of these names gave you opportunities to take some money on the open. PDD, or the Chinese internet names have been absolutely on fire. This thing was up 8.5%. Just like Caesars too had a nice gap up to the 200, right? Those are great places, in my opinion, to be taking some profits. We also talked a little bit about Arista Networks, which I don't think did too much today, so still on the list. But you could see, we're picking some really nice moves. So let's get into today's price action, because there was a lot going on. PPI report came out, right? So a little bit different reaction, still a gap up. But in regards to, if you look at the reaction today, and how things traded for the day, it was quite different. So first of all, let me just bring up last week's report, right? So remember, this was the CPI report that came out. It was not as hot as expected, came in under expectations, 0.6 versus 0.4, 0.3 versus 0.5 for ex-food and energy. Also the headline number, the ex-food and energy year over year, as well as the regular year over year. Both of these came in 20 basis points lighter than expectations. Fast forward to today. Right. Notice that you had a pretty good report. By the way, Empire Manufacturing was strong today too, but 0.2 versus 0.4, 0.0 versus 0.3. So 0.3 of a percentage point under what the expectations were. The year over year number, 8% versus 8.3, and then ex-food and energy coming in 0.5% less than expected. So these were really good numbers, but it was a little bit different price action. You did get the gap up like you got last week, but you just didn't get a lot of the follow through. So if we go to the S&P chart, we'll talk about this. By the way, I forgot to mention this, so I'll just go over this a quick 30 seconds. Remember, yesterday we saw sell-off at the end of the day. It's very important. As I said, one of my main messages yesterday was be patient. you're going to see different starts and stops with this market, and we still did not get over the 4,000 level in S&P futures. So that's a little bit of resistance, but the moving averages, the 5-day moving average has had a chance to kind of catch up. The 20-day moving average is still all the way down here. So my opinion is, while this market is kind of digesting and being a little bit whippy, right, understand that the trend, the short-term trend, the price is still consolidating above there. Remember, this was such a big move last week that it makes sense for price action to kind of come back up and catch up a little bit. Right now, of course, we could lose the 5-day moving average and things could unfold, but the point is, try not to over trade or overthink this market when there really shouldn't be much to be doing except for sitting on your hands and waiting for a signal. Okay, again, I'm not giving out advice. I'm just mentioning that I see that the sentiment so quickly on Twitter goes from positive to negative and back and forth like that, and sometimes there's nothing really that changed. A whippy price action day is tough, but you do have to be a big boy, big girl, and understand that you're going to have days like that with this market. Also, one other thing to understand too is the Fed is still increasing interest rates. They're not changing. Right? I mean, we're still at a very high level, a level that we have not been in a long time in terms of overall interest rates. So again, it's just that to me it brings another added level of the P word, being patient, right? And understanding that this is not the same when the Fed is expanding the balance sheet, not the same as a Fed-induced type market. Right now, it's the opposite. So again, baby steps a little bit with this market. Now, today, of course, we didn't get that, right? So let's go back to today's price action, right? Very difficult, these gap up days. It's especially when the Fed is doing what they're doing, a lot of times it's a take profit type of day on a gap up. I like to always be selling more than I'm buying. If I decide to purchase some new things, I always want to be, a net seller on a gap up day, right? This was a little bit difficult for me because I really didn't have that many positions on coming into today. So I couldn't really do that, but I try to be patient. Also, if I'm going to be adding some risk, usually what I try to do is leg in a little bit or just put on a starter position, right? And then kind of see how things go, because you could see this is not great price action. Now, of course, we had a headline in here with possible, we don't know what the story is yet with this possible, rockets landing in Poland. We don't know if it's, if missiles just got out. Again, I'm not going to really get into the story because we don't know what the details of the story are, but you could see the price action. We came down and we kind of tested the lows. We tested yesterday's lows. We held. Notice that we got back, we retraced about half this move, but again, the value area telling you that, we couldn't really get over the hump here. All right. So again, we're basically back a little bit above yesterday's, we're back to where we were basically yesterday, a little bit above yesterday's where we closed. So, again, if you're finding some trading opportunities, that's great because the indices are just kind of chopping around. Now, NASDAQ was a little bit different today, and we did take out, on this was again a big move on that 830 PPI number. Notice that we took out this version point of control. Right, this is 12,079. That's going to be a barrier. That's resistance. We talked about this being an upside target, right? That has been taken out. So, again, let's kind of think about things so that our expectations should be where they are. At this point, again, there would be nothing wrong, in my opinion, to come back and retest, come back in here to maybe the 50-day moving average for the Qs. Again, I still view the Qs as, even though we've had this really nice rally over the last week, it's still, there's been much more technical damage here than has been in, say, the S&P or in fact the Dow, which again, the Dow just seems like it's consolidating right now. Perfectly normal with that. IWM also is back above the 200-day moving average. I had a trader ask me yesterday, said, is that a rejection at the 200-day moving average? My answer was yes. For the day, it was. Again, we didn't lose the trend, right? So, I mean, don't get so, my opinion again is don't get so focused on saying, okay, something got rejected rejected. And that means that it's, now we got to go short, right? Or it's the same thing on the downside. If you're playing to the downside, right, and things pause at a level, right, it's not the time to just go back and go long in a downtrend. So when the price is below all the short-term moving averages. So keep that in mind, because candles, daily candlestick patterns, you could see the worst looking candlestick pattern in the world. If it doesn't lose the short-term trend, it doesn't really matter that much. So notice for IWM back above the 200-day moving average, up about 1.5% for the day, kind of a doji looking move, and the short-term moving averages are down here. Again, nothing really horrible about any of the price action, except that, hey, this is actually a good thing. We took out this upside target, right? And that's a place to be, selling a little bit. And then we'll see if we can consolidate in here, maybe back and fill and rest a little bit. Anything is kind of possible with this market, as we know. So again, be patient with it. You don't have to make money right this all in this 1 second. All right. So that's my view on the indices. Let's talk a little bit about the bonds. And by the way, the breadth was strong pretty much all day today, even when it got weak today, right? So this is an inching up in the bonds. The 30-year bond futures did make it up to the 50-day moving average. So again, more progress here, moving to the upside. Now, again, we are having some resistance. This is a resistance level. Let's see if we can get through it. Let's see if we pause and consolidate. What we don't want to see is a move in bonds that really retraces this and gets back below the 50-day moving average. So 50-day moving, these other moving averages are important. Excuse me, that's the 20-day moving average. This is the 50, but a move back below the 20 won't be too good. But I think for now, normal for us to kind of get up here, and even if this kind of goes sideways a little bit, I think that would also be fine. Let's look at the dollar, right? That was also softer today, right? A little bit all over the place with that headline with Russia. The dollar started to kind of move up a little bit, but notice still down on the day, and still, is now down to what's known as S2, which is the second extension away from this value area. One other chart that I wanted to bring to your attention, because I find it interesting, Bitcoin has actually hung in there this week, right? With all these headlines and everybody posting all these jokes and everything else about, what has gone on with some of these counterparties and their risk. It's actually been hanging in there this week. However, I would watch this level, like right around this 16,000 level. This could be just setting up. This could be a bear flag or pennant. So far, it looks like a pennant, but may consolidate a little bit more. But watch, we're just kind of consolidating after breaking, right? I would be mindful. And if you're looking for downside, I hate to say 11,355, but that's the next level that I do see to the downside. Also for the week, maybe watch 15,000. Sorry, let Thinkorswim update. Maybe watch, instead of 16,000, maybe 15,895 is a better level to watch. So if you're looking for some shorts in this market, again, wait for the signal. Wait to see if this gets broken at 15,895. Let's talk about some single stocks today. Once again, this was a little bit of a repeat from the CPI report. When you have the dollar going down, when you have interest rates going down, you're going to see things like Datadog, right? I just talked about these stocks, and I said, I would be surprised if these names got going without something else happening in the market. Something else did happen today. Inflation, it was showing that it did go down, and things like TTD, by the way, had good earnings too. Finally had a big move today, up 12%. We could look at this chart. We could look at both of these charts, right? Again, they're gonna be hitting some overhead resistance here. Trend line in here. This is a sharp move from 39 to 53 bucks. Maybe this might be a place to kind of take some profits. Still below, amazing, still below the 50-day moving average and the 200-day moving average, after such a huge move from the lows. Datadog actually got above its just barely above its 50-day moving average. Again, another name that is in such a downtrend, maybe trying to come out of it a little bit, at least to get over the 50-day moving average, but just amazing, 65 to 86, and it just gets to the 50-day moving average. So what am I looking at? This was a name that I mentioned yesterday. Again, I like to see names back above their downtrends. I did take a, on today's dip, I kind of just didn't want to buy the gap up today. So I waited for pins to come down a little bit. I started a position at 25.95. Again, not the best entry in the world. Sorry, 25.80 was my first. This was at 120 when we got the Russia missile headlines, right? And then I added a little bit, just making sure that we were kind of coming out of the woods there. All right, another name that I think is interesting too. Again, I would rather look for names that are back, are have spent a while. Pins is something that's been going sideways for a while. CPNG is another one, right? That has been kind of taking its time, had good earnings. Now, again, always, if I put a trade on and something like this, I feel is a little bit more risky, right? Always know where your out is going to be, know where your stop is going to be. You could either use 1860 or you could use the 200-day moving average. Depends on what you think of your position. This was a starter for me right in the beginning of the day, and that's what I did with that. XME. All right, so metals and mining, right, continued in the right direction. Not a big out, did not outperform for the day, but I like this chart. Again, let's see if it stays above the 200-day moving average. That's where I want to be long in this ETF. I still like what the steel names are doing. STLD was basically flat today. Nucor was at 1.3%, now above this pivot. Again, why do I like Nucor so much? Because it's a cheap name right now, and the group has some momentum and relative strength. Ultimately, 154, 159 is where I think that this could get to. Other names that I traded, I actually went into, I got a little bit lucky with this one, but crude looked like it was moving, had some strength to it. I don't really have any energy exposure on in my trading account. So I went into some OBV, a chart that we talked about in the beginning of the week. And I was able to, this was up 5% today. I was able to take a couple quick targets on these headlines. And I took another one in here. Another one, Celsius, right? Whippy all over the place after after earnings. But again, it looks like it's trying, maybe there was a seller in here, kind of brought the name in here, but it's above this congestion. My ultimate target is right at like 101.42. Maybe I'll try to leave a runner on here, but this should be a resistance area based on volume and price and the market webs indicator that we use. What else? Pure Storage didn't really do much. This is a bit of a slower mover, but I like the trend. This was one of our names coming into the week. All right, that's another one. While I was on the beverages, Monster, a couple names that are consolidating pretty nicely. Monster had a good earnings reaction. It's quite normal, I think, to be consolidating at previous resistance, but I would watch to see if this can kind of punch out here. I've got an alert on this at right around 99. Notice it's in value for the week. So again, may take its time. For now, I'm sitting with an alert at the top of value. All right, just a couple other names that saw, just amazing in terms of the strength. AEHR. Just continues to move up. Now is a bit overbought. I hold this in the TTG trend portfolio. Another one that I own in the TTG trend portfolio, which continues to rocket higher, is this SMCI. Talk about a leader in the market, continues to have revenue and plenty of growth in its earnings. Very nice to see something like this act that well, and I think as it should with the numbers that it keeps putting up. All right, guys, so that's it for today's video. We'll continue to kind of look for more setups. I will do that for Tribeca Trade Group members. And if you have not been a member before, check out the new member special. Guys, have a great night. See you tomorrow.